Hey folks, this is Tom Sullivan, Small Business Department at the U.S. Chamber of Commerce. I apologize about having some difficulty logging in. This is my first time doing Facebook Live, but it's a pleasure to be here. And as we get used to this new way of doing business and working from home, I want to make sure that you know the U.S. Chamber of Commerce is working with our 1,600 state and local chambers of commerce to try to make sure small businesses have the information they need and know what federal resources are available to help them survive the corona pandemic. I'm going to try to describe just briefly a little bit about the U.S. Chamber of Commerce. I'm going to try to explain some of the legislation that has gone on, and then try to really narrow in on how the Paycheck Protection Program loans can help a small business survive through the coronavirus pandemic. So first of all, if we rewind just 5 weeks ago, it seems like 5 months ago, but about 5 weeks ago, when it was obvious that the coronavirus was going to affect not only America, but have a sharp and immediate destructive effect on our economy, at the U.S. Chamber of Commerce, we adopted a very simple principle. And that principle is that no family and no business be bankrupted because of the temporary economic disruption caused by the coronavirus. We then worked with Congress and the White House to pass 3 laws in 3 weeks that would help make sure that when we get to the other side of the pandemic, our economy can get back on track to where it was in January. There are 3 laws that were passed. I'm going to spend the majority of the time on the CARES Act, which was passed just less than 2 weeks ago. And the CARES Act gets a flow of federal money to small businesses on Main Street. The idea of freeing up liquidity at a time when a lot of these small businesses have no money coming in to make sure that they survive the pandemic. So let's just get right into 2 sources of money that the federal government has been given from Congress to help small business. There are 2 main sources. The first source is the Small Business Administration, SBA, their disaster loan program. The second source is a brand new lending program called the Paycheck Protection Program. So the SBA Disaster Assistance Program, it is not a new program. This is a program that has been around for about 60 years. It is designed to help communities rebuild after a tornado, a hurricane, a flood, or a fire. That assistance is not intended to be fast, but it is intended to be a lifeline for businesses that need capital in order to rebuild. This is the only federal lending program that gets money directly from small business, directly from SBA to small businesses. The rest of the loans, and the loans that I'll touch on in a minute, all come from private banks. But the disaster loan program comes directly from SBA. The terms of the loan are a 3.75% interest for a 30-year term. Principal and interest payments on this loan have been deferred for a year. Any small business, self-employed, or sole proprietor under 500 or under employees is eligible for an SBA disaster loan. You can access an SBA disaster loan by going to sba.gov. That's the government website of sba.gov. On that website, you will see loan resources, and the loan resource that I'm referring to is called the Economic Injury Disaster Loan, EIDL. Now, there is one part of the EIDL that is new as part of the CARES Act. That is an emergency EIDL grant that can be up to $10,000 for small businesses that are eligible to apply for the loan. That grant, which can be up to $10,000, is issued within 3 days of your of speaking with an SBA disaster loan specialist, and it does not have to be paid back. Quite frankly, the intention of this grant that can be up to $10,000 is to help bridge that time between a small business owner speaking with an SBA disaster representative and them actually getting the loan. And again, this is not intended to be a quick solution. This is not intended to provide immediate liquidity, because small business owners who applied for an SBA disaster loan on March 16th, the first day that applications were being accepted, just started getting disaster loans this week. There should be an expectation from the SBA disaster loans. These loans will take 3 to 7 weeks to get. You apply at sba.gov. In about 2 weeks, you hear from a Small Business Administration loan specialist. You talk about the type of cash flow that your business has and the amount of money that you need for a disaster loan. The SBA disaster loan specialist makes the loan decision, and after that decision, within 5 days, the money is ACH'd to your bank account from SBA. It's important also to remember that things are moving at a lightning fast pace, and they should be, because when Congress first started wondering how can we help small business, our lobbying team at the U.S. Chamber of Commerce and thousands of other business organizations across the country echoed the concern for small business, who said, we need cash now. We need help now. And so we told Congress, please act quickly. They're standing up these programs quickly. And SBA is evolving and making the process more efficient. They've got a long way to go, but every hour and every day it is getting more efficient. I'll give an example. I work with a small business who's a landscaper just outside of Dallas. He and his dad filled out the SBA loan application 2 weeks ago. It took them an entire weekend. These are two men who have a combined over 40 years business ownership experience, both college educated. They had a heck of a time getting through that loan application. Now, SBA has improved the efficiency of this application, because fast forward to 2 days ago, I spoke with a small business owner in Arizona who explained that he went on sba.gov, found the application on his iPhone, and completed that application and submitted it in less than 15 minutes. Now, it's still going to take 3 to 7 weeks for him to get the loan if he is approved, but just the application process is easier. Now let's shift to the Paycheck Protection Program loans. When you hear news or you see news that talks about Congress passing $349 billion in loans to small businesses, this is the program they're talking about, the Paycheck Protection Program loans. And of course, because we created this in Washington, D.C., it has an acronym. So you will hear the term PPP loans. The PPP loans are low interest, 1% interest for a 2-year term. The most important thing about these loans is that at the end of June, if you use these loans for specific purposes, you can turn that loan into a grant. That's why they're so attractive. That's why there's so much interest. And that's also why, because they're being loaned, they're being offered by private banks, we expect that small businesses will get the money faster when they need it than they would through the Sba Disaster Loan program. I'll pause for a minute to explain that we, at the U.S. Chamber of Commerce, we have a partnership with MetLife, and we survey small businesses every quarter to hear how they're doing. We just released a survey last week that really got into the survivability of small businesses during a crisis. We already knew that most small businesses have roughly 27 days where they could actually survive without incoming cash flow. We learned from this poll, that the survey that we released last week, that 1 in 4 businesses in America have already temporarily closed. What's scary is that 40% of those small businesses who remained open said they have less than 2 weeks before they're going to have to close. That 2 weeks is tomorrow. So the fact that these loans, these PPP loans, are beginning to be made is encouraging, gives me hope that small businesses are accessing resources that are intended to keep them afloat through the pandemic. So let's get into the formula that Congress created for how much that loan can be, because there is a specific formula. And please keep in mind, this formula was designed to try to keep people on the payroll. And I know that we want small businesses to weather this pandemic, but we do, if you back up and try to get at the motivation of why Congress and the President passed these laws, the fundamental purpose was to make sure Americans have cash in their pocketbook to take care of themselves and to take care of their families. And when it comes to businesses, the way to do that is to keep employees on the payroll. And so that's how this formula was derived, on coming up with a loan and how you convert the loan into a grant. How do you calculate the amount of the loan? The formula that Congress set was you take your average payroll for last year, or your average monthly payroll for the 12 months prior to applying for the loan. That average payroll can average all of your employees, but it gets capped at $100,000. So if you have a senior manager in your business that is making over $100,000, not including health and retirement benefits, you can only calculate up to that $100,000 when you're calculating the monthly average payroll. So you calculate your monthly average payroll, you multiply 1 month times 2.5. That is the amount of the loan under the Paycheck Protection Program. There is a cap of a $10 million loan, but the basic calculation is average monthly payroll times 2.5 equals the loan amount. Now fast forward to June. At the end of June, you calculate the forgiveness of that loan as long as 75% of the loan proceeds go towards payroll. And payroll includes health and retirement benefits. Then you will get that loan turned into a grant. Now the remaining 25% can be used for a specific set of items. Those items are utilities, rent, interest on mortgage, and interest on prior debt obligations. There have been a ton of questions about the calculation of how your loan amount is, how that calculation equates to forgiveness towards the end of June, whether you can get both an Sba Disaster Loan and a Paycheck Protection Program loan. I'll try to answer just the most popular questions first, and then we'll get into many of your questions that were asked before Facebook Live and then during Facebook Live. One of the questions that I get every day, and I am blessed to be able to speak with hundreds of local and state chambers and their small business members, learn from them as well as to try to educate more and more small businesses about resources that are available. One question I get constantly is, well, I'm a sole proprietor. I don't have payroll. How do I calculate what my loan amount could be? So the easiest way to do it is just substitute net income every time there's a place in the law that says payroll. So you take last year's net income, average it out monthly. You can only get, you're still capped at 100,000. You multiply times 2.5, you come up with the maximum loan amount. So, for instance, if you equal up to $100,000, your maximum loan amount is $20,833.33. And then when you want it forgiven, it's the same thing. It's the 75% is used to pay yourself. 25% can be used for utilities, mortgage interest, rent, and interest on prior debt obligations. Another question that I get a lot is, what about 1099 wages? What about, I'm a small business owner. I have one employee, but I actually use about 7 independent contractors. I give them 1099s that calculate how much I gave them. They're an essential part of my business. So can I include them in my payroll calculation? The answer is no. The independent contractors are able to apply for a PPP loan themselves. And what we're seeing is a lot of small business owners are helping those independent contractors, those 1099 wage earners, to work with banks to get them a PPP loan. Now, who gives these loans? Last Friday, April 3rd, was the first day the PPP loan program was allowed to be used by what are called SBA lenders. These are banks and financial institutions that have a contractual relationship with the United States Small Business Administration. In normal times, they actually are the banks that are lending a lot of the SBA products. And the reason they were the first lenders to be able to issue PPP loans is because their data communication with the federal government was already smooth. I like to equate it to the analogy of every time you get a new laptop or a new computer and you try to hook it up to your printer, it never works. It's the same thing with regard to transmitting borrower data confidentially to the federal government to access loans, and then to have the United States Treasury fully back up that loan. There is an electronic data transfer that happens, and SBA lenders were best situated to be able to have that communication between the printer and the computer because they had been doing it for a long time on other SBA loan products. There are 1,800 SBA lenders. On sba.gov, you can find an SBA lender. But since last week, there are over 2,500 additional lenders who have tweaked their systems, kind of like the way we have to tweak our laptop to communicate with our printer. And they're able to get that data flowing in a way that will allow for them to now offer PPP loans. We are hoping that more and more banks and lenders and credit unions are able to offer PPP loans. Now, the beauty of small businesses in communities across the United States is most have a relationship with a lender, with a banker. Many times that relationship started even before a small business owner opened its doors for business. And it's right now during the crisis when those relationships are so valuable, because we know that a local banker wants their local business to survive through the pandemic. Even if they're not offering a PPP loan, you can guarantee that that lender is going to offer the small business owner advice and a contact of a friend and a colleague in a different bank that is offering PPP loans. Because right now, what we're hearing when we talk with different leaders in local chambers who are bankers themselves, they want the business to survive more than they're concerned with whether or not their personal bank is getting the business. And when Congress passed the CARES Act, which set up this new lending program, that's really what they had in mind. They set out the parameters of what the calculation is for this loan and how you convert that loan into a grant at the end of June, but they left a lot of things undefined. There's no way Congress can get into every situation that's unique to every small business. And they wanted to empower local bankers who know their local small businesses to be making these lending decisions. Now, one more question that I'll answer before we get into some of the questions that have come in. The question is, can I get an SBA disaster loan and get a PPP loan? The answer is yes. Now, hopefully the PPP loan will come faster, but there are many folks who want to recover and will need capital to do so, and that SBA disaster loan is still available all the way through December 31st, 2020. One note though, if you get both loans, you cannot commingle the loan proceeds. You cannot use the loan money from an SBA disaster loan for the same thing that you're using for a PPP loan. You most certainly should not use a disaster loan for payroll, because that means you're not going to get that percentage reimbursed or turned into a grant at the end of June. So that is a brief summary of a very complicated law. Thrilled to see as of this morning that over $100 billion of loans to small businesses are in process. I spoke with a small business owner last night in Sandy, Utah, that got a loan from their credit union, and they're seeing the money in their bank, which is tremendously exciting, and we're hoping to hear more and more of those stories in the days and weeks ahead. Now, I did receive a couple of questions before, and excuse me, it's late in the day, so I've got to use my glasses. Got a note from Karen Murphy Carr, and she laid out a scenario. She said, for a legal entity in business in 2019, which added a second location in late 2019, can I calculate payroll using February 2020? So there's a couple of things to answer. So first of all, you have to be in business on February 15th, 2020 to be eligible for any of the things that I talked about. Now, what if you're a startup? What if you had a tremendous idea over the last holiday season and you kicked off the new year with opening up your business and you've been very successful? There is a provision unique to startups that says you could take January and February of this year to come up with the calculation for your loan. There's also an acknowledgement that some businesses are seasonal. If you are a seasonal small business, you are able to take a time period between February 15th, 2019 or March 1st, 2019, all the way through June 30th, 2019. You take an 8-week period anywhere in that time frame, you can come up with your monthly average payroll, or for a sole proprietor, your monthly average net income. And then you do the calculation, you're able to determine your loan amount. Now, the question that Karen had was a little bit different in that that she added a new company. Now, unfortunately, the way that SBA determines it, if you're one owner and you have multiple businesses, it's the entire enterprise that you have to meet that under 500 or fewer employees. So unfortunately, they're all under the one enterprise. You've got to take an average of last year. There may be some flexibility with your banker who may look at a seasonal aspect, which certainly gives you more flexibility. There's one other exception, and that is the hospitality and dining sector. Now, we know that when the coronavirus pandemic hit, that the hospitality and dining sector got hit hardest first. So there's a special exception there that every establishment has to be at 500 or fewer employees. But you can have several hotels with several hundred employees and still be eligible for the PPP loans. That's not exactly what Karen asked, but it's worth at least noting. So there are a number of other questions. I'll just dive into them, and hopefully this will help folks through some of the questions that you have yourselves. So the first one is it even worth applying at this stage? I've heard it's a first come, first served, and it may be too late. I hope it's not too late. I sincerely hope it's not too late. Please talk with a banker who you have a relationship with. See if they can help you. That's going to be your quickest opportunity, and I'm praying for you. Second question we received is, how long will it take for applications to be reviewed? So on the SBA Disaster Loan Program, we expect 3 to 5 or 6 weeks between application, hearing from an SBA loan official, and then making a decision. It's not a quick process, but I feel as though I should be honest to set reasonable expectations. From the PPP loans that just started less than a week ago, it depends on the bank. I'm hearing, so I heard from a New Jersey small business owner that banks with Bank of America, and they filled out pre-loan application paperwork. They then heard back from the Bank of America and got an actual application in. That was 3 days later, and now they're waiting for their loan to be approved. So it's about a week process, and then they are confident that the loan amount is going to be ACH'd to their account. But simple answer is it really depends on the lender. Is there a way to make the process to receive funds go faster? I know, so the simple answer is yes, but honestly, nothing is fast enough. I know that our friends at SBA are working night and day. I know that bankers and lenders are working night and day, and most certainly small business owners are working night and day to try to get this right. And it's getting faster and it's getting better. But it's still not fast enough, and I'm hoping that it gets faster and faster as the hours and days go on, because it becomes more urgent. I would like to say, though, that SBA has actually hired over the last 2 weeks some pretty significant technology companies to help them through the process. Amazon Web Services, that knows a thing or two about data transfer and efficiency, was brought on, was beta tested over the weekend and just went online, I think, on Monday. Also, a subsidiary of Rocket Loans is working with a contractor to help SBA disperse funds more quickly on the back end in their disaster loan program. So they're trying to do things better and faster. We've still got a long way to go to get it right, but I am certainly optimistic. Here's one. I've heard it's difficult to apply for an SBA bank for a loan if you don't have a prior banking relationship with the bank. Is that true? So we're kind of mixing two things together, but I'll take them each separately. So it should not be hard to apply for an SBA disaster loan. Remember, that is a direct loan from SBA to the small business. 3.75% interest, 30-year term, no principal and interest for a year. But again, not a fast process. So if you need immediate liquidity, even though that might help you after the pandemic, it's not going to get you immediate liquidity into the business. PPP loans that are issued through private sector banks. Yes, it helps to have a banking relationship. And there's a couple of reasons for this. One is actually obvious, because if you have a banking relationship, the lender knows you. So it's going to be smoother. There is a trust relationship. I think the technical term is called relationship banking. There's another thing, though, that has come up, and I should explain it a little bit. And folks kind of scratch their head and say, well, wait a minute. Why did a bank issue a loan faster to customers who had taken out a loan before? I mean, most small businesses actually are highly debt conscious. They do not like having debt, and so they don't want to generally take out loans. Why would I be penalized if I've never taken out a loan, but I've banked with a particular bank for decades? Why do I have to kind of get behind in line for someone who has done loans with a bank? And the answer actually is that there's a whole system of checks that banks have to do in order to determine if you're getting a loan, you're not a terrorist. I know it sounds ridiculous given the crisis that we're under, but there are a series of requirements that have been phased in over the last couple of years where if you apply for a loan at a bank, the bank has to go through a lot of effort to make sure they know exactly who you are, and then they report that to the feds so that they are not, to make sure that they're not laundering money for terrorists. So, and the fact that they have all that data on you actually makes it smoother to get that data through the pipeline to communicate back through SBA and Treasury to get your loan approved. So that's the actual rationale, but it has been confusing. It's caused a lot of rumors, and basically it's exasperated a lot of the frustration that many of us have had in the small business community, and hopefully the transparency of the way that I described it helps folks understand. Now, it doesn't make it better because the loans still aren't getting out there faster, but hopefully knowing a little bit about the process makes it a little bit more understandable. There's a question, will the timelines for payments adjust as the timeline of crisis changes? For example, if shelter in place lasts another 6 months, will payment timelines be adjusted? Gosh, I hope it doesn't go on another 6 months. And the simple answer is I don't know. What I do know, however, is that we are not going to run out of money. There has been a concern, and this really it was reflected in the first question that we got of, is it even worth it? I mean, this is a first come, first served basis. You got $349 billion. The banks haven't even been lending this for a week, and we're already at $100 billion. And not all the banks are online. Sounds to me like you're going to run out of money. Well, the good news is, starting last Saturday, the President of the United States joined with the Speaker of the House, Nancy Pelosi, and the Leader of the Senate, Mitch McConnell. They all said we are not going to run out of money. That was echoed by the Chair of the Fed, the Head of the Small Business Administration, my friend Jovita Carranza, and the Secretary of Treasury, Steven Mnuchin. They have all said that there will not be a situation where that small business owner is in line and we have to say to them, sorry, you've got to close, we ran out of money. That will not happen. And so I am actually pleased with the type of bipartisan commitment that we won't run out of money for the PPP loans. We were hoping that the Senate take action today. It didn't go as smoothly as we had hoped. I know that all of the elected leaders are working together to make it happen, and I'm confident that it will. Oh, great question about a very unfortunate situation. My business has already laid off employees. There isn't enough business to keep them open. Um, why would I want a loan to bring people back onto payroll if I am not getting any revenue in the door? So, great question. The reason why there's an incentive to bring back employees onto your payroll, and when you do the calculation of last year, and then you get the loan, then you go back to the bank at the end of June and ask for that loan to be forgiven. You are able to have that forgiven if you bring back the employees up to the level of the calculation to get the loan. And the question of, well, why would I want to do that if I don't have any business? It gets back at the underlying intention of this law. The underlying intention was to make sure that Americans have money in their pocketbooks so that they can afford to take care of themselves and take care of their loved ones through a healthcare crisis. It doesn't seem to make sense in the business world. Why would I hire back employees if I don't have any business? But the rationale is, yes, there are going to be instances where you're going to be paying people not to do anything, but that's on purpose because Congress wants the people, A, not to have their healthcare or retirement benefits run out, but B, also to get money into their pocketbooks so that they can take care of themselves, take care of their loved ones in a health crisis. Another question, are there other types of loans available besides payroll protection? Thank goodness we got this question in before the Facebook Live. Yes. Yes, there are other tools in the financial toolbox to help small businesses weather the pandemic. And really the beauty of pushing these decisions out to the local communities where small business owners know their local lender, they know their local credit union. That's the answer to that question. When you go in and talk, actually you don't go in anymore. I guess when you call, when you have a Skype interview or you call the banker on the phone who knows you, they're going to know what types of financial products can help you. And we know they're going to want to help you because you're part of the community that they live, work, and believe in. So I love that question, and I think sometimes even though we're so focused on the immediacy of $349 billion getting to small business, we forget to kind of step back and say there are other tools available, and it's comforting to me to know that credit union, that local bank, the community bank, the national bank that has a presence in many of the localities, that they're there to help, and we are hoping that they have PPP loans, but we're also confident that they're going to be explaining other tools available, not so that they can make a profit, but because they want the small business owners to survive the pandemic and be in a position at the other side to help our economy get back up on track to where it was in January. I'm going to look over to the comments on the side to see if there's other questions that I can answer or purposefully ignore. Okay. A lot that I'm ignoring. Oh, there is a comment in the chat that is really good to at least highlight here. And that is that I'm talking about one piece of a gigantic pie, and that there are more slices to this pie at a community level. We're trying to follow a lot of this on social media and every source of information that we can find about grants and loans and charitable organizations that are all joining together to try to help small businesses survive through the pandemic. And so this comment was about someone relying on grants and loans at a local level. And good for you for pointing that out, because we're finding, well, it's impossible to keep up with it all, which is actually a good thing. I mean, we know that the fabric of local small business is so vital to our country. It's great to see them banding together in the greatest time of need. Now, we do have a small business digital platform where we are committed to updating information constantly to get the latest information to small businesses. It's it's www.uschamber.com/co. Again, uschamber.com/co. That small business digital platform has been up and running for about 19 months, and we are very proud to provide easy to understand information for small businesses who, through guides, and there's actually a 4-page guide that does a heck of a lot better job describing the Paycheck Protection Program loan than I just did. And we want as many small businesses to utilize those online resources as possible. We do not want a small business to decide to close its doors simply because it wasn't aware that there are federal resources to help. So again, uschamber.com/co. Let's see what else. Once approved for PPP, what's the timeline on that money to be delivered? From Randall Scott. So thank you for that question. It depends on the bank. Some banks are able to process quicker. Some have a pre-application form to fill out. The standard form that shows what types of information should be available is on our small business digital platform at uschamber.com/co. It is not exactly the form that every bank is using, but it gives you a good parameter, a good outline of the types of information that banks will be asking for in order for you to calculate your loan and get a PPP loan. It looks like Cincinnati and Miami is in the house. Thank you. And Florida. There is a comment of how overwhelmed the banks are, and you're absolutely right. There's been a lot of discussion, there's been a lot of frustration, and that frustration is at every level. It's at the local chamber level, it's at the Department of Treasury level, it's at the bank level, it's certainly at the small business level, it's at the United States Small Business Administration level. The good news is that frustration is because everyone wants to help. And I'm given so much optimism from small business owners to get through that frustration. And we're hoping that the more banks and lenders who come online, the less frustrating this process will be. Great question from Rebecca Neal Foster on whether you can get both a PPP and an EIDL. The answer is yes. The caveat, however, is if you get both, you cannot commingle the loan proceeds. You can, however, refinance the EIDL into the PPP loan. And that's a decision that should be made in consultation with your lender. When you apply for a PPP loan, one of the first things that lender application asks is your calculation. It says monthly average payroll, or if you're a sole proprietor, monthly average income under $100,000 times 2.5. And then there's this little section that says plus EIDL. That's in case you have an EIDL loan too and you want to refinance it in, and you can. But there are different kind of considerations that every small business might have about how much debt they're taking on and so forth. But that is an option. Simple answer is yes, you can get both an EIDL and a PPP loan. Oh, great question from Bob's Bar. They ask, under the PPP, if approved, do employees get paid from the date of loan approval or retroactive to the date of government-mandated closure of business? Then, are employees required to terminate their unemployment claims once back on payroll? Seymour, on the paper. So, the simple answer is you have until June 30th to rehire employees in order to get the forgiveness amount. And when those employees are rehired, they come off of unemployment. Is there a way to check the status of applications? Mr. Milton asked that. It depends on the bank. Different banks have different ways to access online portals. Some work better than others. Oh, here's a great question from Peyton George. You applied early in the process through the long, tedious form. I feel your pain on that. How do you know your application is being processed? This is with regards to the EIDL loan. That is the, excuse me, the Sba Disaster Loan. It unfortunately, you got to just wait for the Sba Disaster Loan Specialist to contact you, and that's usually about 2 weeks. I am hopeful that they will make their process more efficient now that they've got Amazon Web Services kind of helping them through the process, so that you'll get an actual electronic certification that your loan has been applied, but that doesn't exist yet. So thank you for that question. Oh, what happens with the money that is not Patty Peretti Canwisher, so I apologize if I mispronounced your last name, asks, what happens with the money that is not used for the loan on a PPP? So you do have 25% flexibility of using PPP loan money. That 25% can only be used if you want to convert the loan into a grant for utilities, rent, mortgage interest, and interest on prior debt obligations. Those are debt obligations that occur before February 15th, 2020. And if you don't spend more than 25% on that, and the 75% go toward payroll, you're able to then convert the loan into a grant. Another question that kind of comes out of that is, if you don't meet that calculation perfectly, you could still use that money, you just don't get it forgiven. And a 1% interest in a 2-year term is fairly generous, certainly to provide the type of liquidity that's needed to get through the pandemic. Oh, here's a great question from Carol Amon from Michigan. This comes up a lot. So when we get back to the underlying question of, or the underlying emphasis of Congress to keep money in the pocketbooks so that they can take care of themselves and their loved ones through a health crisis, we also bolstered the state unemployment system so that if you're on unemployment, the federal government is adding $600 to every unemployment check. And so it kind of it comes up with the same question that Carol asked. Well, if it's more attractive for someone to be on unemployment than it is to be at work, why would they ever come back? And the simple answer is that once the state and local governments declare that that specific type of business is safe to return to work, that person's no longer eligible for unemployment. That's the simple answer. Now, the more complicated answer is really depends on what type of business, your relationship between the employees and the employer. But the simplest answer is that when Congress tried to provide a more generous unemployment benefit, they did end that generosity when it is safe to return to work? Oh, great question from John Duncan. How much should I apply for the SBA EIDL, the SBA Disaster Loan? And it's a little bit bizarre, although this is in my words, not John's. A little bit bizarre. I filled out the whole application and there's no line for how much money I want to borrow. Well, that's on purpose. And this actually is a little bit more like the normal loan process pre-pandemic that you would have with a banker. You basically, you fill out the information that gets into kind of what type of assets, what type of cash flow you have in your business. Then it gets reviewed by SBA. Now the SBA loan specialist who calls you will go through your financials on the phone, and together, between the government loan officer and yourself, you're going to determine what the loan amount is. And the threshold is the cap is $2 million, 30-year term. But great question. I wish it said right on the loan application, hello, applicant, we're not going to ask you the amount, because I get the question all the time. It was the weirdest thing. I submitted an application, but it never said how much I want for a loan. And the answer is that that's the discussion between the loan official from SBA and you as a small business owner. You have that discussion. I learned last night that the average credit scores to get a loan are about between 620 and 640. If you have a lot of cash on hand in your business, not likely to get an SBA loan. And even though Mr. Duncan didn't ask this, I will say, because you deserve to know this, not everyone is going to get a loan. Banks don't have to offer the loan. SBA doesn't have to offer the economic injury disaster loan. And unfortunately, there are some small businesses who desperately need the loan that won't get it. And I feel compelled to at least be honest with you in that regard. That's a question that does come up, and I'll give you the information because you deserve it. Great question from Christine asking if it's over $2,000 for an EIDL, do you have to personal guarantee? I believe you have to have an asset guarantee, but it no longer has to be a property guarantee. So traditionally, you need a property guarantee for SBA loans. They've waived that in this in this instance. I believe that they do ask for a guarantee having to do with assets that can be other than property assets. So I will close by thanking folks, thanking especially, let's see, see if there's any last minute. No. So first of all, I want to especially thank Gordon Food Service. I do apologize for my own personal technical difficulties logging on to the Facebook Live. It has nothing to do with Gordon Food Service. It has everything to do with me, who's still trying to get used to the working at home and conducting online webinars like what we just did through Facebook Live. So thank you, Gordon Food Service. Thank you to all of you for watching and contributing and asking really good questions. I do want to encourage you to have these conversations with the banking community who you know and trust in your communities. They are the best people to be able to offer you advice that is going to get you a loan, because they care about you, they care about your survival, they care about what happens after the pandemic, when we're going to be counting on our nation's small businesses to get our economy back on track to where it was back in January. And lastly, please avail yourselves of our small business digital platform to get the latest information. We want to be there to help. We want to arm you with information that will help you get a loan, help you through the pandemic. That online small business digital platform is www.uschamber.com/co. That's uschamber.com/co. Thank you for watching and good luck. Take care of yourself, wash your hands, stay healthy, and be well.